Morning, everyone. Luis Borsellino, Man Over Market, and today is, let me put my glasses on, is actually the 8th of September. After a long Labor Day weekend, we got 4 days of trading this week. The market actually is up about 3,300 points. It's coming off the highs. I'm showing here up 3,250. Look, we're in this range. We had a shortened session on Monday. I think it was just basically on the Labor Day holiday, and we're no different than I've been telling you. And I think that if people have been following me, I said that I thought that the market will close, take this all back and close. The all the indexes will have a minor gain. Right? We got December on the year. I think we've got the big thing is going to be on September 17th. We have the Fed. We're going to talk about whether we're going to get the rate increase. It looks like that the bonds have kind of stabilized between 155 and the 152 area. So I think that's probably maybe a 40 to 50% chance that there will be a rate hike. Excuse me. All right. So let me start sharing screens. And the most important screen I can show you, and we have to look at is the one that I keep showing you over and over. But it's what's controlling the market right now. So these were the lows that we made back in this is March, I think. No, I'm sorry. This is the lows we bet. Yeah, 10, 16, 11, October 2 years ago. And here is where we're actually trading in that range, right? From 1850, 1830 area. Now today, we're going up. We're up 3,300 points. This is the 50% between these lows and the all-time high is right around 1974, right here. I got it marked in blue. And that also was the low in March of this year, where we went down, and then we kind of made these lows and rallied and made the all-time highs. So that's where we're stuck right now. We're stuck between I think the 1975 area down to the current lows. We're going to have market volatility. There's still a lot of news out there that is basically, not good for markets. But is it enough for for the U.S. markets to be impacted? So we got the Chinese problems and the Chinese devaluating their currency and so on, and the global slowdown, and all the global commodities all making new lows, and oil nice rebound so far off the 38 buck area. But let's just talk about today. I'm gonna go in here. All right, let's go with this right here. Let's go with the value area high of 19. I'm sorry. We're talking right now a high of 1961 overnight, and we have a low of 1930. Okay, overnight. This was the shortened session, the shortened session from on Monday. All right, and then right here we have a value area high of 1925.34. All right, we got a mode sitting at 1921.75, and then we've got a value area low of 1914.75. So the market is trading way above value, okay, and actually going from making this breakout of this distribution here, which is putting our bull bear zone where, guys, at 1935.
Yeah, 75.
75. I'm sorry.
1935.
Okay, so let me show you how easy we do this. I'm gonna do it on screen in front of you, and this is the stuff that we're working on now. So every day we get in here, we put in our value area high, which is, Luke, you want to read these off for me? Failure area high, which I just talked about.
1926.
So 1926. Our point of control is
1921 half.
1921 half. Failure area low.
1915.
1915. Okay. Let's give us our pivot.
1920.08.
1920.08. So that pivot, not to be confused with our regular pivots and the bull bear zone.
1935.75.
35.75. All right, so I just put these in, and then what we've done with the software and the stuff that we are developing, it just automatically puts in the value area in the shaded areas here, and then that's how it gets on your chart, and then you can use it as your trading reference all day, which is a nice visual to have when you're trading, so you don't have to keep going back and forth to the profile, right? So this is a 15-minute pivot, or our 15-minute pivot is actually right here in a buy. All right, you have to take out the 1946 area, and then the top of value, which we just talked about, is right here at 1926. The point of control from Friday is 1921 and a half, and down here is 1915. So I can leave this on my chart, and then our bull bear zone is 1935.75. So the market would have to go down below that before we saw any other difference. Right now, the market's kind of in a neutral state, and the 5-minute pivot is up above at 1959. Okay, and the 15-minute pivot is up above, is in a buy down here. So we're stuck between 1959 and it'll be 1947 with two pivots. Now these pivots, not to be confused with the day pivot, right? The day pivot, which we put into here, calculated R1, R2, R3. That's the high, the low, and the close divided by 3 to get the floor trader day pivot, which everyone's used for years. And then these pivots are our pivots that we put together in our own proprietary method. Okay, so this is where we're at. We're kind of stuck up here now. I've got the profile set at 25 or 50 cent ticks because I wanted to get it all on the screen here. You kind of look at where we came from. There's a lot of vacant territory up here. We got to start putting more volume. Remember, I talk about this, the area over to the right, showing the volume areas, and we can see now that the market is starting to build a base down here of 1920 half. Look how see how these horizontal lines are getting bigger. This means that there's more volume being put in these areas. And and then you see where we came from, right? So I think that that's the important thing. And you talk about more volume in these areas. I would have liked to see us spend more time in here, consolidate. But it is September. We're getting towards the fourth quarter. Traditionally, August has always been a slow trading month, and we've had a lot of action. So I just think that we're still going to be stuck in this range until we can take out that 50% from, as I was showing you before on the, I believe this is our other chart. Sorry. Let me see if I can pull that up again. That's another ES chart. Let's go to a day profile chart and see what that looks like on a 20-day basis. Okay, so here's a 20-day chart, day profile only, and this will show you. This is giving us the like a rolling average on a 20-day basis, and you can still see up here 2080 is the 20-day point of control. I mean, so we're basically right now trading at the 20-day. 1931 is the 20-day value area low. looks like we had this gap right here, which is filled on the opening now in 1945, because we've already, we filled it with a 1961 high. So this is a day only profile. That means there is no overnight session involved with that. Okay. All right. So I'm thinking that, we're going to have to retrace. This looks like sort of, we're going to put some more volume up in here, but I'm thinking that we may have to retrace back into this area. Certainly try to make we're at, for me to tell you that we can go back to the top of value. I mean, the key is going to be right here, this 1935.75. Once we get through that, if we violate the bull bear zone, then I think that this is in play, the 1926, which is the value area high. So, it's hard for us to comprehend when we get stuck in trading ranges that are like 15-point handles, and then all of a sudden we're looking at overnight moves that are 3,000-point moves, right? And we're getting daily volatility at 4,000. Remember what I told you, volatility should be our friend as a trader. We really, gives us an opportunity to make some money, right? When I look at the profile, also one of the things I'm looking at here is I think that this is an unfinished top, okay? And this is showing that this gray area to the left here is telling me we need to put more volume there. It's going to become an attractor. So this is unfinished at the top. Now, the other thing that's really important, so that's 7 points from what we're talking about, is that if we do not take out a Globex high, I consider that a failure, and then I would be looking for retracement to the other side, right? So when you look at the action from Friday, okay, this is here, right here. So our 1927 right here, this is that value area high. This is sort of where the market in the overnight session kind of consolidated. Friday was a terrible trade, spent most of the day just going back and forth. As you can see, the bulkness of value right in here. And then in the overnight session, kind of took out the high and kept going, right? And we kind of, we trace back to the high, basically the highs of on Friday, which is the 1930 area. So this is all going to be the way the market's trading. I just think that you're going to get a two-sided trade from here. Any questions out there, Anthony?
Nothing yet.
All right. So taking a look at the other markets, I have not put in any of the value area highs or lows, but we do have oil coming off the highs of last week, trading back to the 45 area. So I'll tell you what, there's a lot of schools of thought. I think oil's still going down. But every person you talk to out there has a different opinion about oil right now. So once again, for you oil traders, this is becoming what we say is a volatile market. It should give you an opportunity to make some money. All right. Take a look at gold. Gold also coming off its lows of last week, which are 1114.70. Is the 1,000, we're only, 100 points away from, $1,000 an ounce gold. And people are talking about going to $950 an ounce. And, I get stuck with this because I feel like gold's a demand product. And right now, certainly, one of the things that's causing the Fed and the rest of the world a lot of problems is the fact that we have no inflation. And when you think about gold, gold is a hedge against inflation, but also once you own gold, you have to, you're out of cash, you're in gold, you have to pay to store the gold. So it becomes almost like a negative interest rate to hold the product. So how much, to hold the commodity. So how much, how much of this do you need to protect yourself from any other problems, right? So that's one of the things that we have to look at, right? So gold, and then like I said, I've been talking about the bonds. Let me bring those in here. ZB right here. I think the bonds has just been sort of like in a in a holding pattern until we get what's going to happen with the Fed on the 17th. All right. If there's any questions, Anthony?
Nothing.
Nothing?
Covered everything.
Okay. All right, everybody. We'll see you tomorrow. Have a good day trading. You can get a copy of this on your YouTube and go from there. Talk to you later.